all these governments are bankrupt, right? We know that. And all these fiat currencies are worthless. We know that. But they've been trying to pretend like those two things aren't true. The bottom is in.
And there we have a brief snippet from Larry Lepard. And for those who don't know who he is, he's an investment manager for Equity Management Associates, Sound Money, Gold Stock Fund Manager, and he coined the term, if you fix the money, you'll fix the world. And Larry's also been on record saying that Bitcoin can easily hit $2 million within 6 years. So you might be asking, well, when was this article printed? Well, it came out last year, October 18th of 2022. So he's saying that it can easily do 100x within 6 years. That's by the end of 2028. Pretty bold prediction, but we'll get some more on this. Let's hear more from Larry.
For those who haven't followed the news, obviously the biggest thing that happened today is the Bank of England pivoted. They had been doing QT and pushing rates up, and they're pretending like everything was fine. And in fact, the headlines were rather 2008-ish. They said that they had to reverse their policies, not necessarily on the interest rates, but on the QT side, and they were going to increase QE, and they had to intervene in the markets to prevent the collapse of the gilt market and the British pound. And they were going to do so by direct intervention into the marketplace, which is really historic and important, and kind of reminds me of 2008. Things were breaking or are breaking. They were breaking so fast that they had to do it without delay. And if you go look at a chart of the British gilt, the 30-year bond, it was almost in a free fall, and the interest rate was in turn, or the pound, I'm sorry, was also in a free fall. And this is because of the policies that they've had to put in to protect their citizens from the outrageous increase in electrical costs. we've all seen the tweets of guys who are running pubs and bakeries and so forth, and even in their homes, people seeing 2, 3, 4x increases in their underlying electricity rates. And then the new British Prime Minister, Truss, came in and said, well, okay, what we're going to do is we're going to cap your costs, and we're going to cover the difference over 2,500, I believe it was, for households, and some similar number for businesses. I don't know the specifics, but of course that's fine, and one could argue that is the right policy to protect their citizens. The question is, of course, where are they going to find the money to do it? And they don't. It's not like they're running a big surplus, right? They don't really have the money to do it, and as a result, they're going to have to print the money to do it. And so, this printing was started. I think they announced the coverage or the protection of the electrical costs a couple, 10 days ago or so. And obviously the bond market and the gilt market, the bond market in gilts and the pound reacted quite negatively, and it was becoming kind of a rout. And so they got in there and they reversed their policies. It was a huge pivot, incredibly important. And I think what it shows is this problem is coming to all central banks. And the Japanese have been doing this for a while, but everyone kind of looks at the Japanese and says, well, yeah, that's old news over there. But in Britain, they had not been pursuing these policies, and they suddenly changed. The headlines were scary, right, to everybody. And what it said to me is, the system is breaking. It reminds me very much, I feel like we're in July or August of 2008. It hasn't totally broken. The Fed hasn't pivoted, but it shows that, what the Fed is doing in terms of tightening monetary policy and withdrawing accommodation, quantitative tightening, it's just not going to work. They can't effectively do it. They're going to be forced into pivoting, or else they're going to have a big hole in the ground that used to be the economy. It's going to look like 1929.
And Larry's not the only one that thinks this. There's quite a few people that are saying the Fed are going to be forced to pivot. They're not going to have a choice. You see, exchange CEOs are saying that Bitcoin could drop back down to 15K if they don't pivot, because you can't just keep tightening the system and keep sucking money out the system. And well-respected Bitcoin evangelist and crypto guru Arthur Hayes, he's warning Bitcoin to get smoked, quote unquote, if the Fed does not pivot. So Larry has a point. Do you agree with him? Let's finish hearing from Larry.
To me, it was enormously significant, and the Bitcoin price firmed up a tad, I believe, but more importantly, the gold market smelled it, in size, and the gold market was up $30 on the day. That's 1.9%. Silver was up 53 cents on the day, which is 2.86%. And so, the markets took note, and of course, the U.S. markets caught a bid. Everything changed. S&P was up. I mean, pretty much everything was up. And gold stocks, which is what my fund focuses on mostly, although I have a lot of Bitcoin as well, you know, the GDXJ was up 7.76% in one day. That's a pretty large move. And so, you know, what I see and what I've seen for some time, I mean, all these governments are bankrupt, right? We know that. And all these fiat currencies are worthless. We know that. But they've been trying to pretend like those two things aren't true. And, you know, the result was a run on their currency and a run on their bonds. And so in order to hold things together, they had to step into these markets and change their policies. And I think that it's only a matter of time until the Fed is forced to do the exact same thing. So, and I think the market realized that, you know, worldwide. And, you know, in my opinion, you know, the bottom is in now for, you know, gold and Bitcoin. Very clearly, and it's only a matter of time until, you know, the problem accelerates in other areas. I mean, you know, look, there are, you know, trillions and trillions of dollars of derivatives, and most of those derivatives are bets on interest rates and bonds. You know, when you get the moves of the size that we've had in the last few weeks, you know, the U.S. 10-year, you know, going straight up, and other bond market, you know, yield on the U.S. 10-year going straight up, the bonds going straight down, and all these other things, what you see is a system breaking apart. And, you know, which is fine. I mean, it is what it is. But, you know, the policymakers, you know, are going to be forced to respond because they can't have their bonds falling apart. I mean, the U.S. Treasury bond is the 10-year is the measure of interest rates for the entire world. The Treasury bond's gone up substantially, and you know, the 2-year has gone up even faster. You know, when the U.S. has got $30+ trillion of debt, you know, at an average interest cost of, you know, kind of 2, trending towards 3, but as all that rolls, you know, it's going to go to the 3, 4, 5, 6. You know, basically, you cannot, you know, you can't fund yourself, and so you get into what others have said is a debt death spiral. Which is to say higher interest rates are going to cause the government to be unable to fund itself. Okay, fine. So how does the government react to that? They react the way the BOE just did, and they you know, they buy a Treasury bond. How do they buy it? They buy it with money they don't have, money they printed. That is really kind of that's the crux of the matter, that they are going to be forced into printing because, as Max has said so many times, you can't taper a Ponzi. You know, we're kind of in a print or die environment. And so, you know, that couldn't be better for sound money alternatives, gold and Bitcoin.